Happy Friday, traders. It is 8:01 a.m. Chicago time on Friday, the 12th of May, 2023. Thanks for joining me. This is episode number 2468 as we barreling towards 2,500 episodes, 10 years of daily trader bites with some misses here and there for vacations, sick days, technical issues, but not that many. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Popping right over to the Convergent Trading pre-market summary sheet. Again, I encourage you to follow twitter.com/conv trading to get this as it drops. The overall market posture this morning, the risk posture is risk on. We have a risk on sentiment today. We've got a market that is gapping up, I think, pretty much across the board, and has pushed up into and through the all-important 4150. No real major earnings. We do have European shares of Richemont, a very big luxury brand, boosting luxury stocks. One thing to note, luxury stocks in Europe are like tech stocks in the US. They're quite a big portion of the index, and so that's providing a boost across the board. Debt ceiling talks were postponed. They were due to talk today. The principals were due to talk today. They were postponed until next week, and that means they're really working hard at something that isn't time wasting for you and me, the taxpayer, as well as for everybody else whose job and paycheck is at risk, including Social Security, Medicare, and all these things that these morons put at risk every year for the country's citizens. And by morons, I mean all of them. Blanket statement. Politicians, every bit of it. So I'm not choosing sides here. I never have. To me, they're all the same. But that's what we've got. The debt ceiling right now is, with CPI behind us, FOMC behind us, non-farm payrolls behind us, with the way the weekly numbers for jobs came out yesterday. Right now, the debt ceiling is the risk overhang. This, because it's the risk overhang, this means that you have to have a good news feed, because you need to know if the movement that just happened is a result of debt ceiling related information or not, because this is likely to be a market mover. The market is ready to pop higher, in my opinion, and the opinion of others that I listen to, and we're just waiting for this debt ceiling issue to be resolved. And so this is what's on deck here. As soon as we figure out what the deal is with the debt ceiling, we're likely to blow through the 4206, 4208 area in the S&P. The Nasdaq's already done that. And that's what drives me to believe that we are very much likely to throttle up from here, because the Nasdaq's already getting a lot of the inflow, and it tends to front run. And so as soon as that happens, we're likely to have a pretty, in my opinion, mark my words here, on Friday the 12th, we're likely to have a pretty monster momentum day up out of this massive month and a half long balance range. This is my opinion. I'm not telling you to trade that. It's not a recommendation to trade, but this is what's setting up. Musk announces that X, Twitter, it's called Twitter, but it's also called X Corp now, has hired a new CEO who will start in 6 weeks. Tesla also recalls 1.1 million cars in China over braking defect. The key, we had some key releases in the overnight session. GDP out of Great Britain month on month came in at negative negative 0.3%. The consensus was 0. GDP growth year on year prelim is 0.2%, hardly growing. Great Britain, the economy is hardly growing, 0.2%. The prior 0.6. The consensus was 0.2. Great growth rate Q on Q prelim is 0.1%, in line with expectations. Bunch of numbers came out of Great Britain, France, and others. But the key release this morning, we got import prices, export prices this morning. Export prices fell pretty dramatically. Import prices increased more than what was expected for the month of April. But the key number this morning is Michigan sentiment prelim. This can be a market mover. That comes out at 10 o'clock. The inflation expectation comes with that. Michigan sentiment, the number you want to be looking for or comparing to is 63. And the inflation expectation, look for 4.6%. We'll see how the market responds around that. So there's a slew of numbers that comes out of University of Michigan here at 10. And then beyond that, we have the crop report. Mr. Beeks. The crop report at 12 Eastern today. For those of you who are trading grains, and then Baker Hughes at 1, and then Fed's Jefferson, Fed's Daily at 2:20, Fed's Bullard and Jefferson at approximately 7 o'clock this evening, 7 or 7:45, not sure which. So that's what's happening. The S&P is in a multi-distribution. It really looks it's a multi-distribution. I definitely agree with that. The point of control is at the lower end of the range, stuck at 41.5275, but it's very, very likely to pop. We expect the point of control to pop up to about 56.50 or so. That'll bring it into balance. But for now, the S&P is in a multi-distribution profile. I wouldn't say too active price discovery, but pretty decent. 141,000 contracts. 141,000 contracts traded so far. The inventory is 100% long, 100% long. So 100% of that 141,000 was traded above the prior close, and the range is 20.75 points, 21 points, and the point of control is right up against our MC point of control at 41.5275. Point of control, the MC point of control in this area is 41.50. The magnet's around 41.53. So we have just a poop sandwich right there, 41.50, and we've been dealing with it for quite some time. So let's take a look at the charts. The charts. Here we are. We still have the same levels. Boom, boom. We did manage to get pretty close. You can see the overnight high right here on Edge Pro X is 41.6450. Our upper range resistance is 41.70. Watching that very closely, seeing how this is treated on a shorter time frame once we get there. But you can see yesterday, we managed to push to this. 2 days ago, we managed to push to this initial support area of 41.12, and then yesterday just put in a higher low again, and again. So we've had we've had a higher low yesterday, and now we're pushing to the other side of this MC point of control, 41.53. To me, this is very likely to test this. If you recall, I think it was 2 days ago, the plan, the expectation is gap up, minor pullback, push to 41.70, consolidate, break through the 41.70, pull back to the 41.70, initiate along to 41.83 to the next resistance level. That's the main plan for today. Again, same old, same old. I mean, we're looking almost exactly the same as we did 2 days ago. Otherwise, we're looking for an open that checks the overnight high, checks the 70. If we impulse down, if we get an impulse down, impulse. So that's 7.5 to 8 points or better in one rotation, then the pullback will be checked for a short back to settlement. right? Short back into the 50 and back to settlement. Yesterday's settlement 43.75, and then from there it does what it will. From there, actually, you're looking for the point of control from yesterday. The volume point of control from yesterday, which is 41.40 right here, 41.40. That would be scenario 2. So there are your scenarios early in the day. But we're still in this kind of sausage making factory of a range that we've been in for quite some time, and there's quite a bit of fuel here to feed off of. I mean, this thing's got a ton of volume in it, and that volume, once it starts to release to one side or the other, it's likely to drive pretty well. And again, we're gonna very, very likely see ourselves above 42.06 and holding this time if we push up and through. So you can see just how beautifully balanced this range has been. Just beautiful. Excesses on the edges, on the extremes. Market moves back in, trades the middle, blah blah blah, and we've been trading the middle for a week or so, and that's what we've got. So every morning it's the same thing. I come in, I look at what happened overnight. I don't know why I bother, but I look at the monthlies, I look at the weeklies, I look at the dailies, because I'm following a process like a pilot's checklist. That's what trading's all about. It's about process. And I find myself thinking, why did I do all that? This is useless. It hasn't done anything different. And then the market opens, go through our trader bite to share these thoughts with you. Then we look, then essentially the market opens, and I'm reading, okay, what kind of open did we get? Where's this open? I'm giving you all the secret sauce here. I'm looking at where the market opened versus the prior auction, the prior range and value. And then I'm looking for the first rotation out of there, the first big rotation out of there. And then I'm checking for if it has any key areas in the way, or what it may be trying to do in a bigger picture. Stick with the bigger picture, higher time frame charts for this. Then when I see that the pullback is poor, then I trade in the direction of the impulse. So if the market impulses and the pullback is quite poor, then I'm just going to look for a trade in the direction of the impulse, and that's going to be my bias. The location of the open is very important, by the way, very important. I don't want to be along a market where the open is above, especially not early on. And then that's it. And then however the trade unfolds, that's not my business. That's the market's business. Manage the trade per plan, close it, log it, be done with it, and then look for the wait for the next. That's the boring process of trading. Here's the TPO chart. Nothing to be said about yesterday, except that yesterday was an inside day. It was a normal variation day, pretty balanced, and now we're above. And this is another reason why this high at 41.70 is likely to be toast. Here. So I'm expecting this thing to run through to this 41.83 area pretty quick this morning. Okay, 41.83. Looking for that to come up pretty quick. And then beyond there, you have the 94, which is, well, it's different for volume, but somewhere around 94, you have the point of control up there. And then we get the 06 that I talked about. That may happen today. The 06 is 50 points away, which is kind of heavy for a rally on a Friday, but it's very, very much doable. So let's look at the delta. These guys are sleeping at the wheel here. Delta is just not giving us anything useful. The small lots and the large lots are offsetting each other, and the very large lots are not doing very much, so they're diddling in the middle. So right now the delta the cumulative delta, which is right here, the cumulative delta is actually just barely or slightly negative. You can call it zero. So the market's quite balanced despite the fact that the inventory is 100% long. Look at the Nasdaq here. The Nasdaq's below VWAP. It is well above its open. There's the Nasdaq session open. It's below VWAP. So we'd expect the Nasdaq to be somewhere here in delta, and it's not. It's down here. The delta is negative 750, which can recover pretty quickly, but there's some disconnect between the price action of the NQ and the delta, which kind of has me thinking that there's likely to be chop early, and if there's a break, it's likely to come later. Crude, this beauty of a product to me, crude has been pretty steady. Look at what it did. We talked about crude just yesterday. Look at what it did. Remember we talked about, you know, these boxes, 74, almost got to 74, 74, 74. And then it started to move away and it fell right out of the box. And then this morning, just now, it is checking the bottom of this box right there at the 71.30 or so. We're trading at 71.60 or so. It's checking this box from below. So if it does not throttle up, if crude does not throttle up and continue, when the second bracket kicks in here at 8:30 Central, 9:30 Eastern, if that second bracket does not throttle up and take the high of the first bracket, which is at 71.77 in crude, so if 71.77 does not get attacked between 9:30 and 10 Eastern, then you're very likely to drop lower and into the pocket at 70. It's very likely to shoot down to 70, and then from there, the longs are likely to be in trouble into the 68.80 area. So very interesting. I mean, crude, really just check that out. It's and please don't trade crude, the CL symbol. Trade the MCL. It's financially settled. That way you don't have to deal with deliveries and things like that. The roll's also a lot easier. The Nasdaq, not able to lift its head. I mean, that whole FDIC nonsense yesterday, nothing. It's just the Nasdaq was very, I mean, the RTYs, just look at it had a B-shaped profile yesterday. This is a long liquidation profile when the S&P closed near highs on a weak high, and so did the Nasdaq. So there's just no money moving into the Russell. There's just no interest in the small caps right now, because it's just there's so much overhang from between the banks, interest rates, and the debt ceiling. The impact on small businesses is much more robust than in bigger products. Okay, that's all I'm going to cover. That's 20 minutes. Good luck today. I would like to ask you to make sure that if you're not a subscriber to the channel, hit the subscribe button. It costs you nothing. You'll get notified when I post the next link or video, and then it helps promote the channel within YouTube's algorithms, and it helps more traders find it. Please hit the like button, and please subscribe if you have not done so. Okay, I'll talk to you on Monday morning. Good luck. Chat soon.